Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome back to this week's top stock picks for the week of December 15th. My top pick is Credo Technology Group. Credo makes active electrical cables. So if you see the acronym AEC, and they're often purple, we're going to get a look at that as this their homepage rolls by here. And Jensen uses these for NVIDIA rack scale architectures. They're copper. Jensen still loves copper because in the same rack, now he's building these racks. Let me show you what they look like. So this is a GB300, the state-of-the-art that's rolling out this year, NVLink 72. 72, that's how many GPUs are in here. So this thing is, I don't know if it's 5 or 6 feet tall, but it's got 72 GPUs in it. And at that, packing these into a rack scale system like this, copper is the best to connect the GPUs together for the lowest latency. So copper is still in demand. Jensen still loves it. That's why, Credo has soared, but now there's doubt. Now there's talk about, well, is everything going to go optical? Optical interconnect, lasers, that sort of thing. Well, it's possible, but we went ahead and bought the stock. I'll just show you the pullback here in Credo. Symbol is Credo Technology Group, symbol CRDO. We're buying this pullback here between 140 and 145. Because they're moving into optical already substantially. So let me show you the buy alert that I sent out on Friday. Said, yeah, we know Jensen still loves copper wiring to scale up. Now, there's going to be some terminology here. Scale up in his NVLink 72 rack scale systems. But he's expanding his use of silicon photonics. And we'll talk about another company he's doing that with, Coherent, to scale out. So within the data center, you want to connect all these rack scale systems together, maybe across an aisle or a room, and then scale across where you connect multiple data centers. That's where fiber comes in. So, silicon photonics, that's the phrase Jensen uses now for what he's doing to scale out and scale across. You'll also hear it just called fiber, optics, photonics, all those terms. So, but why buy Credo now? Well, I did a little homework, and Credo is building optical digital signal processors. They've got a new product line called Zero Flap. Now, this is something I didn't know much about, but there's a latency issue called flap in these systems, and Credo is trying to address it with a product called Zero Flap. So they just made a strategic acquisition recently. Hyperloom to help them do this. And, so they've got a dual focus now. They've got AECs and then what would probably be called AOCs. All right. To learn more about Zero Flap, obviously just go to their website and search optical or search Zero Flap, and you can learn more about that. What else did I want to show you here? Oh, so I mentioned... well, let's look at the financials for Credo. So what kind of growth are we talking here? Why is it a Zach's #1 rank? Well, scroll down here. Let's go to the detailed estimates page. Over here on the left-hand margin, you've got all your metrics that you could want to look at in terms of estimates. You can look at fundamentals, key company metrics. So I've spent most of my time going to the detailed estimates page because I want to see, first of all, what is the sales growth? So I've got sales estimates here. They just broke through $1 billion this year. This fiscal year ends in April. 172% growth. That's insane. That's how in demand these active electrical cables are. The purple cables with copper in them from Credo. Next year projected only 38%, but I expect that to go higher as they cross 1.5 billion. Profitability, well, their margins are so good that profits soared 280%. So, valuation wise, it's going to be a little rich, but they're in this sweet growth spot. So, all right, I mentioned sort of their competitor, and I want to call them out here, Coherent, because Coherent focuses on optical interconnect, and so it was a big deal when at GTC in March, the NVIDIA GPU Tech Conference, that a collaboration was announced between Coherent and NVIDIA, and that sent Coherent shares obviously soaring 180%. Coherent is selling its aerospace and defense business for $400 million. Did you know Coherent makes Apple Face ID? I did not know that. So I just want to mention them, that they're sort of the leader here. Also because one of my brilliant colleagues, the director of research for Zacks Investment Research, Shiraz Mian, he picked both Credo and Coherent in January of last year for his top 10 stock picks. Every January, he picks just 10 stocks and holds them for the whole year, unless something goes terribly wrong. But he doesn't sell the winners, and he's got big winners in Credo and Coherent. Let's take a look at the Coherent chart if we can. So I just wanted to highlight his genius there. Here's Coherent. Coherent is, not only does it have a nosebleed chart, but it has a nosebleed valuation too. But it'll probably get bought on this dip. They're going to come for it in the 160s, 170s. So, but just to give you perspective on the two companies, and I wrote a piece. This is the bull of the day piece, so you can find that just when you're on Zacks.com. All you got to do, the cursor is already in the quote box. You just type in COHR or CRDO for Credo, and you'll find some of our latest content. And you can read here about the NVIDIA collaboration for Coherent. But I see Credo, I'm not going to compare them on valuation right now, but I do like the growth versus valuation of Credo. And so that's why I picked it. That's why I'm a big fan. And, I could be wrong that, is 140 going to be the bottom in this sell-off? So far, things are looking good, but I would add more. Like if this goes down, to 125, yeah, then I'm increasing our position. All right, that's our look at Credo. And now for the man who picked both Credo and Coherent for his top 10 stock picks for 2025, Shiraz Mian.
Hi, Shiraz Mian here. My pick is Adobe. I have a couple of slides in which I flesh out my thesis for Adobe. You're all aware of and familiar with the stock. It's been a leader in the software space. This slide shows the hard times that the stock has fallen on. Lately, this is a one-year performance. The red line is the Zacks tech sector. The green is the S&P 500. The underperformance, Adobe's underperformance, isn't restricted to the trailing 1 year. Go back 2 years, go back 3 years. The stock has similarly lagged. I'm not featuring it and recommending it as a contrarian or tactical idea. I'm recommending it for those of you that have a preference for value stocks and stocks that still retain a significant growth potential, but have a relatively longer holding horizon, definitely exceeding the next 12 to 18 months. So what's going on with Adobe? It's all about AI. And the Adobe story is at the receiving end of what AI is expected to do with the broader economy in general, but the software space in particular. The worry here is disintermediation. So as the top bullet on the slide shows, the worry is that the coming AI world is immensely disruptive and dilutive to the core Adobe business. And there is some serious competitive pressures in the marketplace already. Most of you are likely familiar with Figma. This is the stock that was an acquisition target for Adobe, Canva, Microsoft, and others. And we see these competitive pressures in the key metric that everybody in the Adobe story really tracks, which is ARR, the annual recurring revenues. There's been a pretty persistent decelerating trend in ARR growth in recent quarters. Last week, it reported results. The earnings were very good. It beat on the top and bottom line, gave us a good, reassuring view of the current period. But even there, the ARR growth momentum continued that decelerating trend. On top of the ARR deceleration is the margin issue, and the margin issue is tied to management's pretty heavy spending, adding GenAI functionalities to pretty much all of its product, plus the rollout of new products. I believe that when combined with the stock's current valuation outlook, the results that we see and the company's very strong position in its existing marketplace, it's a compelling investment idea for long-term investors. So you'll be picking a quality stock at a very reasonable price. It's a dominant player in its space, has tools that are essentials to its target market. The growth profile, even though there is deceleration, it's very much intact. And even the deceleration question, management explains it as reflection of the large base. The ARR total is now north of $25 billion. So for a company with that magnitude of recurring revenue to be growing 10% and higher is by itself impressive. No company can continue growing at the rates that it enjoyed 2, 3, 4 years ago. And then we come to the valuation question. And here I have on a forward 12-month earnings for Adobe, and this is a 10-year history. You could see at the bottom of the slide, you could pause the presentation to focus on what the bottom of the slide shows. It's obviously 15.1 times at present, but over the last 10 years, it has traded as high as 58.6 times, as low as 15.1 times, with the median at 37.6 times. So it has never traded this low over the last 10 years. And this is the forward 12-month PE. You could do trailing, you could do EBITDA multiples. I've seen some of the sell-side analysts covering it use EV to free cash flow. It's hard to get an estimate for free cash flow for most of you. So you could use EV to trailing 12-month free cash flow. And the trend line isn't any different from what you are seeing from this forward 12-month. In here, I've plotted the Adobe forward 12-month PE relative to the ZAX software industry. And as you could see here, the stock traded for most of its life at a premium to the industry, but is currently trading at a significant discount. Again, at the bottom of the slide, you could see a summary of what this 10-year period shows. In this next slide, this is a reproduction of the preceding slide, meaning Adobe forward 12-month PE relative to the ZAX software industry. But here, I'm presenting Adobe's multiple as a proportion of the software industry multiple. It's currently trading at 0.51, meaning the Adobe multiple is 51% of the software industry multiple. In other ways, it's trading at a 49% discount to the software industry. Again, there's a 10-year summary for how this relationship has unfolded. 1.75 is the high, meaning the stock has traded as high as a 75% premium, as low as 0.51, which is the current state, meaning a 49% discount. And the median is 1.36, meaning Adobe shares have traded 136% of the software industry multiple, or a 36% premium. So a significant discount. Now, there are worries, as I noted at the top. Those worries most likely has some element of truth in them, and that's the reason why the stock is trading at this much of a discounted valuation multiple. And here is the earnings outlook. And this is the price consensus and surprise chart that we at Zacks really are huge fans of. The black line with the green arrows on it is the stock price. The arrows represent earnings surprises. You could see that in this time period, all the arrows consistently are green, telling you what an impressive track record the stock has of earnings surprises. These squiggly lines represent the evolution of EPS estimates, consensus EPS estimates for the year. So the light brown is 2027, as the key at the top shows. The light blue is 2026, and this is 2025, 2024, and 2023. Intuitively, the gap between these two lines is the growth rate. So you could see there is consistent earnings growth rate over the coming years, which is a continuation of the trend we have been seeing for a while. The stock has been in the doghouse practically from this time, which is around 2022, though it did make a recovery through February 2024 and has been on a downtrend. The question you have to ask, if you have any interest in Adobe shares, is the stock validly in the doghouse and no price point, no valuation level will take it out of there? Do you believe in the AI eating Adobe's lunch story? And if there are some threats from the emerging AI functionalities and abilities to Adobe's business, then what is a reasonable new valuation level for Adobe? I strongly believe that we are at that point right now. I think last week quarterly results shows us that there's plenty of earnings power left in the company, and as we see more and more of these positive earnings results through 2026, this narrative that you are getting a high quality, effectively a blue chip software operator at a significant discount to the industry, to the market, these opportunities don't last forever. And that's essentially the crux of my Adobe thesis. Thanks for watching.